Welcome everybody back to the second part of the financial roundtable of ABC ceilings. And just to remind you, I'm going to take 30 seconds here, just to remind you of what we were doing. We're interviewing Lou about his new company, ABC Ceilings. And we're using this series of worksheets to elicit information from Lou about his business. And which we'll ultimately then use to that information to input into the financial template. Last time we got through Lou's startup costs and funding, and I think you all got copies of those in the Excel version. Today we'll try to get through the rest of the worksheet so that we can get an overview of the totality of Lou's business. And then, as I said, try to turn to the template for next time. Just a reminder, well, two things. One, we'll use the Excel versions of the worksheets, and Kathy will populate those on the screen as she did the Word versions last time, but the Excel versions are a little more flexible. Just a reminder, ABC Ceilings is just a sample. Lou's future livelihood will not depend on us getting every last detail right. And so there's some amount of skimming and hand waving as we go through this. And that's fine. It's really the process we're trying to get. Any questions before we jump into the second worksheet, or any questions on the first ones that we sent out before?
No, but thank you, Kathy, for sending those filled in sheets.
Yeah, and they were just what we filled in last time. I mean, the Excel
Right.
version, but they were just so that everybody was on the same page.
So just to recap, you should have gotten an email from the team that had links to the financial projections model, the templates, and kind of a recap of what we did. So hopefully you've all got that, and then you're using it as a basis. And what we're going to do here is just continue with that, and we'll send them out afterwards like we did. We also set up a third session to kind of wrap this all up with the projections model based on the time and the great interaction we were having last time. We thought that would help to extend it and make sure we got it completely done.
Any other questions or comments before we leap into it?
Yeah, Linda, if any of us male old fogies interrupt you today, your response should be, "I am speaking now."
No comment.
Ooh, nice background.
Thank you. Go right ahead, please. I'm looking forward to this session.
Good.
All right. Well, then let's launch into it. And I think we're at salaries and wages, which is the second of the worksheets.
Right. Did you want to just kind of walk through these from 1A, 1B, and then go right?
Oh yeah. Okay. Let me do that real quick. So just to remind us of what there is, 1A and 1B are the startup funds, what it takes to get the company started, and where the money comes from. The second one is looking at what salaries and wages Lou will have to pay. The third will be looking at what operating expenses, monthly expenses Lou will have just to keep the business open. The fourth and fifth are where we turn to the sales portion of this and looking at essentially his gross margin for his various parts of the business in the fourth one, and the fifth one, looking at projected volume. So beyond gross margin, how many things he actually has, which together allow us to figure out his total gross profit. The sixth one then is the miscellaneous cash receipts and disbursements, the things that send us away from accrual accounting a little bit and talk about deposits and his receivables and additional fixed assets and things like that we'll need to create a cash flow. So last time Lou told us he needed $109,000 just to get the company up and the doors open, and that he was going to get most of that from his savings, a car loan, and a business loan, although we'll see what sort of reception he actually gets when he takes all this to the bank, but that's for another day. And most importantly, they matched.
And you may recall that the big revelation for me last week was recognizing that I'm going to need to fund startup salaries for my salesman estimator and my office manager bookkeeper for 4 months prior to really beginning to issue any invoices and generate any income. And that was a revelation where I realized that plus the rent that I had to pay for 3 out of those first 4 months, it was going to require additional funds over and above that which I was originally estimating, in the neighborhood of something like $35,000 more than I was originally estimating. So that was a big change as a result of that review and discussion last.
Which probably proves the sort of general observation many of us have had with clients, which is it takes more, it's going to cost more to start the business than they thought it would originally, or sometimes we might think it would originally.
Yeah. So let's move to salaries and wages, Kathy. My plan is there's just one owner, of course, and that's me. My plan is I'm going to pay to begin with an average hourly pay rate of $25 an hour, and that's going to be for me and my other 2 key employees. We're simply going to project at the moment a 40-hour work week for each of us, and the 2 full-time employees, I will remind you, is that one is going to be a production manager, a job superintendent, or job foreman. He'll wear all of those hats, depending on the volume that we're doing at any given point in time. But he's basically, his job is going to be to bring in the jobs at or below the estimated cost to do them, so that we can achieve the gross profit margin that we're shooting for. And the other full-time employee is the estimator salesman, who's going to be doing most of the job cost estimating and liaising with me and with the production superintendent for calculating costs, estimates, and bid purposes. And the other employee that we're going to have is the part-time bookkeeper, office manager, and that's just going to be one person in that category 5, Kathy, line 5. And we're going to be paying that person $15 an hour, and she'll be working 25 hours a week. I've identified the person that's going to be coming to work in this thing. She's going to be working basically 5 days a week, but it's going to be 8 o'clock in the morning till 11, and then 1 to 3 in the afternoon, 5 hours a day.
Lou, if I could say a couple of words about this worksheet when I give it out to the Simple Steps class.
Mm-hmm.
I remind them that the owner line is in here in part so they remember to put it in there. Sometimes clients build a business and sort of forget to put themselves in there, and this reminds them, even though when we get to gross profit later and their own labor, we need to be careful about double counting, and I remind them that. Also, in the version that I hand out and the version that ultimately will distribute, I remind them that for seasonal businesses especially, we're just looking at averages here. Your employee is $25 an hour, 40 hours a week. But in fact, for seasonal businesses, they may need to fill out a more monthly version or a quarterly version of this, where hours might go up and down during the course of the years, more accurately reflecting reality. But we've simplified a little bit here just to get the conversation started.
Excellent. You know, that reminds me, Rich, of one other thing that's worth saying at this point in time. I say to my startup clients all the time that you need to think of yourself as wearing two hats. Hat number one is that you are working in this business, you are managing it, and you need to be paid a fair market wage, you know, for your management services, just as if I owned the business and was employing you to run it for me. You wouldn't do it because I was cute. You would say, "Show me the money, Lou," you know, and so putting yourself in as a cost of the business at a fair market wage is something that you really need to do to assess the overall feasibility, you know, of this business. If you don't put yourself in for any expense, you're kidding yourself about the profitability of this business model. And of course, the second hat is that the ownership hat. You want to earn a return on your investment, you know, and the risk, you know, that you're taking in this business. Just as if you were putting your money in the stock market or in some other business, you want to get a fair market rate of return, you know, on your investment in your ownership hat.
I suggest it might take them a year or 18 months to get to that level. Perhaps they can't afford to do it initially, but get it in the model. If it takes them 3 or 4 years to get there, there may be a problem with the business itself. But they might not be able to pay themselves on day one, but let's get it in the model.
Totally agree. I even say to people, even if you don't pay yourself initially in the first X months because you've got enough saved to live on personally without doing it, and you don't want to hammer the business with those initial expenses, at least from a planning point of view, from a business strategy and planning point of view, you want to include your cost.
I have a question on clarification here.
Yes,
So,
ma'am.
as I've used the model with clients, I've kind of divided owner and full-time employee into two modes of thinking. One is if you're actually doing work that is the action of the business itself. So if it's an accounting business and you're doing accounting, then count yourself as a full-time employee there. But if you're also operating, promoting, doing other things around the business, then I put part of that time in owner. So I've accounted times in both categories for the client doing owner work and business work.
Yeah.
Is that wrong or?
Outstanding comment, Kathy.
Yeah.
You know, really outstanding. I've got a client right now who is starting up a digital marketing business. And so that's totally a know-how business. You know, it doesn't require a lot of funds, doesn't require a lot of tools and equipment and assets to get started. It's completely a know-how business. But she's going to be spending about 50% of her time actually doing the work, you know, the programming work for her clients and social media marketing, and another 50% of her time in general business management, you know, work. And so we've put her in at a $50 an hour rate, which is what she wants, you know, but we put her in for 20 hours in her ownership hat, and the other 20 hours are going to be in her production, you know, direct cost of sales hat. So excellent comment, Kathy.
Yeah. And I think the only trick in doing that is you need to keep in mind, tally them up on the side somehow so that you account for all of their hours and that you don't wind up double counting. So you don't have them in there working full-time as the owner and also full-time
I'm
as
in
the
favor of
employee,
it.
and somehow that turns
Meeting I
into
just got off
200
before
hours a
this one
week.
that they did that. They stopped the match.
Oh, Alan, you need to mute.
Alan, you need to mute.
Yeah, he's muted.
Okay. And,
Yeah,
and-
so it's just, it's something that you have to keep in mind.
and as Hugh reminded us last week, you need to document your assumptions in here so that when you go back and look at this thing 2 weeks from now or a month from now, you can answer the question, what the hell was I thinking? You know, when
Exactly.
I put these numbers in here.
Exactly.
And
And
you've
that's what the
got-
notes are for. Yeah.
With the Excel spreadsheet format, you got all the blank space, you know, you can type in, you know, and just document your assumptions so that you know, document an assumption. Owner's had 20 hours a week, but I mean, the other 20 hours a week is going to be in a production hat.
Exactly.
Can
Exactly.
you
Hey, just
comment
one-
on contractors? Oh, sorry.
One comment, it's Tom.
Yeah.
I don't know of a startup in which the individual starting up only spends 40 hours. I don't care whether it's owner or whether it's action in the business. More like 60 to 80 hours would be typical of what I see. So
Tom, you're exactly right.
how would you account for that?
Ditto. Put them in. Put the owner in as 80 hours, because at the end of the day, if they really are working 80 hours a week, and they're going to be paying themselves less than minimum wage, and so you can again, you put the numbers in, they may or may not actually pay themselves those first few months, but that's the reality, that they're probably going to be working that many hours a week.
The other way, Tom, is for the owner to say to themselves, I want to pay myself $6,000 a month, $72,000 a year. I'm going to put the numbers in here at an average hourly pay and an estimated number of hours per week to achieve $6,000 a month. You know, just make the numbers work to get to the 6,000. And whether you work 120 hours a week or whether you work 15 hours a week, you're going to pay yourself, you know, $6,000 a month. And it's like Armstrong, you know, when you were paid a flat salary wage, regardless of how many hours you had to work to get the job done. So I do it both ways, Tom. You know, I sometimes put a lot in, but most of the time I just simply use some type of an average hourly pay and an estimated number of hours to give me the dollar number that I want to see.
And the templates, remember, are simply ways of keeping score. And so they're trying to reflect what actually happens in the business, but they shouldn't dictate what happens in the business. So to the extent they reflect that helps.
A question on this?
Oh, sorry.
Question on this? Yeah. So I have two questions. One, first I'm going to ask Denise's because she nicely posted it in chat. What about contractors and that say you're going to use in your installation business? Should you capture those here?
Rich?
I would say if it truly is the installation business, let's save that for the job itself. If there is a contractor, this would be more the all the time, every time, independent of jobs themselves. So if Lou has, he needs to get some accounting contractors in there part-time, he would put that in here, for instance. But the actual job contractors will wait until we account for the actual costs of the job over in the projected gross profits. It's a judgment call. It can go either place. Again, the same caveat. They should be put where they are most informative for you. So if it's a job contractor, it should go over in the jobs because that's where it's going to be most informative to you. And secondly, that we just need to make sure we don't double count anybody. So I would tend to leave this as think of it as the more office independent contractor, or maybe Lou doesn't do a great job and so keeps legal counsel on retainer all the time. And you might want to put the retainer cost down here for all the lawsuits.
Another good example of that, Denise, is that if I were going to contract with somebody to do social media marketing and SEO optimization of my website, and they were going to give me 10 hours a month, you know, of their services, I would put it in here in line 6. You know, but one person, you know, X dollars an hour, 10 hours, you know, per week, or 2.5 hours a week, or 10 hours a month, and because that cost does not vary according to sales, you know. But if it's a variable cost, as Rich says, that wouldn't be there if the sales aren't there, you know, then that goes in cost of goods sold, that type of variable cost. Which brings us, Kathy, you had another question though.
Yeah, I do. So, and Rich, you can talk about this too, since we did it with a client recently, but one of the things that I've done with the model is to make sure that the full-time work, the hours for doing the work are fully accounted for, so that they can project, even though they may not take payment from the model, how much revenue do they need to get to pay themselves what they want, and generate a margin from the delivery of products or services to be the size of business they want to get to. And that's been kind of an eye opener when they see how much sales they have to get to cover their costs.
Kathy, you are absolutely right. And that's another good reason for putting the owner in here as a line item, even if it's at 40 hours or 80 hours or $6,000 a month, or however it is that you put it. Because then looking forward to the end of the template, building that cost in, you see, oh my gosh, I have to sell 300 X's, whatever it is that I'm selling per month or per year or per week or whatever it is, in order to generate the sort of profit that I'm thinking of generating. And it's an eye opener, either in them saying, oh my gosh, there's no way I can do that, or it turns the conversation, as happened with the one we looked at, to your next portion of the conversation, which was, okay, how do I get there? What do I know now? I need to sell 6,000 units in order to pay for all this stuff, including myself. Now let's turn to marketing, let's turn to strategy, let's turn to pricing and all that stuff to talk about how to get there, which is your next conversation with her.
Yep.
Denise has another question, I see.
So Denise said she had a client that wanted to know if he could use this to document the fact that his time was becoming a loan to the firm, and that could be paid back in the future. Any thoughts?
I don't know if it could, well, I guess you could use it to document it if you did it month by month. It certainly is a document that's going to tell you you're lending the company at the beginning your salary and so forth. How you actually want to document that and keep track of it may be something a bookkeeper could help with, but you could probably use this to document it as well if you used it on a historical basis.
Yep. Let's look at line 9 before we move on to the next tab.
Yeah.
Those of you who are familiar with the formal score template recognize that payroll taxes and benefits are pre-populated in that worksheet. So Social Security, Medicare, federal unemployment tax, state unemployment tax, workman's comp, you know, that type of thing. They're already pre-populated. But in my financial planning, I recommend to clients that they put an additional 3.3% in other employee benefits to bring the total up to 15%, because 15% of base pay is a really good norm, you know, for financial planning purposes. And so we've populated this particular input document with 15% of base pay.
And it's just there as a reminder to, again, as you're having this conversation with clients, oh yeah, there's taxes and benefits on top of that too. As Lou said, the actual template does a much more detailed calculation, but this is just a 15% number. gross number.
And for you guys who are helping your clients with this whole process, it's worth remembering that these payroll taxes do not apply to independent contractors. So if you put $10,000 of funds in the independent contractor line, it's not going to change payroll taxes at all, because the independent contractor, if you pay that person $20 an hour, they're responsible for payroll taxes, not you. Okay. So if there are any other questions on this worksheet, shout out. Otherwise, let's move on. Next, Kathy.
So the next item is, I'll talk while Kathy's finishing typing. Well, two things. One, the final version of the worksheets, I have a number of notes and hints on the side. And so when we send that out, some of this will already be there. But the next, moving along and thinking about the company, how much does it cost to start up? What sort of salaries will we have to pay our people? And then the next step on the tour is what monthly costs are you going to have month in, month out before you start selling? But month in, month out, what are the fixed operating costs? Again, this is sort of a summary sheet of the whole year, a monthly as an average. For some businesses, they'd actually want to lay out month by month by month, and the template does that too. But for conversation purposes and for starting purposes, this is just sort of an average month. So Lou, as you're thinking about ABC ceiling contractors, what will those monthly expenses be?
Well, in the advertising side, not too much. You know, it's basically keeping that website updated and maintained on a monthly basis. Some SEO optimization, because I want to be on that first page, you know, in the Google search engine when anybody's searching for some type of a ceiling systems contracting business. And from time to time, I may run some ads in some trade journals just to try to keep my brand name, you know, out there. And I'm estimating in the neighborhood of around, you know, $3,500 a year for this expense. So call it $300 a month, you know, okay, which would be reasonable for my type of business.
Okay. How about insurance? And these are just suggested. There may be other items, but
well, you know, in the insurance side, I think that for insurance purposes, we're only going to need about $150, you know, of insurance costs per month.
I'll call you back this afternoon.
Because I'm not going to have a lot of people coming to my shop, in my office. Insurance costs on individual jobs are going to be covered as part of the job cost estimates. And so general insurance for fire, theft, liability, those kinds of things is probably going to run me about maybe $1,500 or $1,200 a year. So I'm thinking $150 a month should cover it.
And this will not cover this employee health insurance. To the extent that you provide that, we would have picked that up over in the salary portion, the tab prior to that. So this is just general property, casualty, liability, business insurance.
Correct. And around $150 a month in that, Kathy. And legal and professional, and I'm going to need an attorney from time to time on contract stuff because most of my work is going to be bid work, and it's going to be contracts with general contractors and contracts with directly with owners So I'm going to need some insurance, some legal advice from time to time. And I'm going to need an external accountant to help me with tax planning and monthly or quarterly tax estimates and remittances, stuff like that. I'm figuring that $175 a month should cover me for legal and professional services.
Okay.
I've got my own internal bookkeeper, office manager for regular QuickBooks accounting. So this is just really for these two outside people.
Okay. How about rent for property?
It's gonna cost me $2,000 a month. The place that I've got in mind, and got a verbal agreement with the landlord to lease as soon as I'm ready to go.
Lou, Tom wants to know if you're going to be doing any remediation work with asbestos removal and so forth. And does all that need to be subcontracted out? Maybe that's on the job itself when we get there.
Yeah, that's exactly right. If I run into that, and it's very possible on remodeling renovation work that I could run into that. That's such a specialty area, Tom, that I'm going to have a subcontractor, price that and give me quotes to include in my bids to the general contractor for my ceiling systems contracting work. And I'll have that specialty sub working for me to handle any asbestos remediation or any other type of work of that nature.
Okay, so you had
What was the rent?
2,000, is that what you said for rent?
$2,000 a month, Kathy.
Okay.
You bought your equipment and so forth, if I remember.
Yeah.
And the rent is for your office and storage garage, right?
Correct.
You had a storage garage.
That's right. My office and my storage space. What are we looking at?
Repairs and maintenance?
Yeah,
Sort of ballpark is a monthly?
yeah, I'm definitely gonna have some of that, because there's absolutely wear and tear, on my tools and equipment, and truck, and I want to be. I'm a little unsure about that to begin with, but I want to be in the neighborhood of I think $500 a month, $6,000 a year for the size of the business that I'm contemplating.
Multitasking. So how much was this?
500.
Okay, thank you.
Mm-hmm. Probably in that next category, I'm definitely going to be doing some travel and marketing and promoting my business, and meeting with general contractors and meeting with owners, and a little bit of wining and dining, etc. So I'm figuring maybe $250 a month, would cover it.
Especially because you have all those cases of wine that you have delivered all the time, and so you can.
Exactly right.
Yeah.
Utilities are not going to be an awful lot. About $150 a month for light and heat and water in my office and the shed, the garages.
So they're not included in your lease.
But I don't have to pay for heat in the garage. So I'm having to pay for my own utilities over and above the fixed lease cost to the landlord.
Okay. Always a critical question to ask. Sometimes as we know, Kathy and I just talked to one last week, and she said, "Oh no, all that's included. I have no utilities at all. That's included in my rent." So it goes either way.
You know, one thing I'm thinking about, Kathy, is we're going to have some type of office expense. And so maybe we change the category 7 that says lease or rent of vehicles. Maybe we change that to office expense, or yeah, fine, put it in there. And I'm thinking, you know, $250 a month for general office expenses.
What other things haven't we thought of that we would? These are always tricky because no matter how many of these are the month in, month out expenses that a business has, and there are always a few that you think about later that you say, "Whoops,
There's some that can be comprehended in the overall category, but they're basic things like telephones, you know.
Yeah, we don't have anything in there for phone.
and internet."
Your internet website
Yeah.
maintenance, things like that.
And for internet, sometimes there's, you know, weird little costs that you don't think about, like paying for storage,
Yeah.
you know, which can be just like a $3 a month kind of thing, or your annual fee for your URL, you know, things like that.
Well, now that you guys have mentioned it, I'm thinking out loud, we're going to have an office phone, strictly a business number, but each of the 3 of us, me and the job cost production manager and the estimated salesman, are going to have a cell phone. I guess we probably should include something in the neighborhood of what, $60 a month for each of 4 phones, you know, maybe $250 a month, you know, for telephones, for 4 phones. And I wasn't thinking about that. So we probably need to increase that cost, Kathy, by another $250.
So maybe $400 or $500. Here's always the judgment call. You start
At least I'd say $400 in there, Kathy.
Yeah.
But you don't have internet, or you don't have internet in here either.
Okay, you're right. And so let's make that that's probably closer.
Yeah.
Now that I include internet as well as all the phones.
Yeah.
The other thing is just generally software, right? If you are using like Microsoft Office, a suite like that, there's a charge for that. Or if you would be using some kind of estimating software.
And I'm thinking of I've got those factored into my office expenses. That's what I'm thinking about. You know, using Office 365. You know, which is a lease service, and using QuickBooks Online. You know, and so I've got those costs, thinking wise, built into office expense. Linda, good point.
Back to travel and entertainment. One thing you might want to think about is training expense for your estimator. As companies introduce new products, there are always issues about, okay, you know, what does that do to time on the job, how I estimate my hours of labor, my productivity. So there's training involved sometimes as well.
Yeah, you're right. And that could easily be $1,000 a year. You know, so maybe we should include another $100 a month or $1,200 a year in travel, meals, and entertainment, and make that $350 instead of $250.
If I know this industry, you may have to put a little in to travel for fines and penalties for the type of whining and dining you're doing.
That's in legal fees, Linda.
That's right.
That's that contractor that he's bringing in.
You guys forget that I was the compliance person for the ceilings business.
Oh, that's
That's
right.
all I'm
Yeah,
gonna
okay.
say. That's all I'm gonna say.
What do you want
I
to,
do
what did
think
you
we
want
should
to
put
add
a,
here?
I do think we should put a note in there, Kathy, that includes employee training,
Okay.
because we put another $100 a month in there for employee training.
So with training, what about certification or like a professional membership? You know, you see like certified estimators or certified, you know, something like that, it's not a training expense necessarily. It's like a membership expense. If you're part of an industry group, Lou.
Yeah, you know, that, if you take certification and dues and subscriptions, you know, there is some expense there, Linda, and we're probably talking about $100 a month, you know, again, for that cost category.
Yeah.
I hadn't even thought about dues and subscriptions, you know, or memberships to maintain certifications.
Yeah, certain industries, that's such a big deal. Other ones, not so much.
Lou, are you going to take credit cards?
No, Jim. In my business, the vast majority of payments are going to be made by check or direct deposit. You know, with my general contractor business these days, they all do bank-to-bank transfer. You know, electronic transfers.
So where would you put a credit card fee in this if you were doing it?
Yeah, I'd change a line item.
But you know, it might bring up the more general question of bank fees, which you might have just buried in office expenses.
Yeah.
If they were hugely, if you were taking credit cards or you were doing international wires or something that got big enough to deserve its own line item, maybe you'd put it in there. But that's another question.
Agreed.
Yeah, you know, it's interesting as you go through this, and again, it's sort of a balancing act. This is not a chart of accounts by any means, because that would get us right back to sort of blowing people's minds. But we don't want to lump everything into one item, because then you lose track of it. And so, you know, it's really a conversation with your particular client and you and your own memory as you go through this, into what's worth breaking out and what's worth lumping together. The notes, as Lou said, are a great place to document, oh, I lumped internet and phone together into communications, or I broke them out separately. But it's that balance of kind of keeping it manageable, but still capturing everything. Jack asked about depreciation. I just want to stop for a second and mention this and then put it aside. The line item is here. The template calculates it automatically. Of course, it's a non-cash charge in traditional sense. It's here. I don't think we would really ever fill that in with a client, but the template calculates it when it calculates the actual income statement.
Kind of safety equipment would you need?
Well,
I think we did some of the safety equipment back in the startup funds, if I remember. Oh, I keep clicking on that and I can't click on it. I think we had a category for safety equipment back at the beginning.
you know, we definitely have safety issues, but that's basically process and procedure stuff, Henry, as opposed to equipment costs. I mean, if you're working on scaffolding, you know, because you're working on 12-foot high ceilings, and the whole room is scaffolded in order to be able to work in that area, you've definitely got safety issues, but they're not really ones of equipment. You know, scaffolding has safety aspects to it too, but that's simply a cost of the scaffolding that we've got, as Rich says, we've got built into equipment costs already.
Rich is correct. It's included in lump sum equipment on.
Yep. Yep. No, you're right. Good
So was that a trick question, Henry?
question.
No, it was
No,
just.
just kidding. Just kidding.
Before moving on, go back to this expense tab, Kathy. Sometimes, depending on, but let me stop myself. Recognize that in the template itself, you can change descriptions exactly the way we've done in this input document.
Exactly.
You know, all those descriptions in the template are pre-populated, but they're not sacred. I mean, you can change them to fit whatever the client needs. I mean, for example, in I don't recall what it was, but in working with my a client that wants to start up a social media marketing agency, you know, they're not going to have any repairs and maintenance because it really is not an equipment intensive business. So I remember we changed that line to include an expense that she wanted specifically for her business, and this was a convenient place to make the change. Yep. The other thing is that very often I will say to startup clients, I don't know what it is, but sure as God made little green apples, you've underestimated your expenses, you know, for this business, because that's just human nature. So let's include $200 a month in miscellaneous expense. And it's a category to cover whatever it is I should have thought of and didn't.
Yeah.
Do you want me to change this to 300?
Yeah, why don't you do that? You know, and know that there's a little bit of a fudge factor in there, you know, of an unknown miscellaneous category that I want to include to make sure I'm not underestimating expenses.
When I do simple steps, I suggest to them not to use miscellaneous as a real category because it doesn't tell you anything, but to do exactly what you said, Lou. Put everything else that you can think of in a category. Keep miscellaneous to as small a number as you can, but it's the stuff that you can't think of.
Exactly.
Are these repairs, is this truck and equipment repairs?
Yes.
Okay.
Yeah. And any repairs that might be necessary in the storage space from time to time. But it's basically vehicle equipment repairs.
Okay.
Anything else?
So I think we've got this one covered.
All right. Again, you know, this is an iterative process. So if you wake up at 2 in the morning and remember, oh my gosh, I forgot this, we can, in some next iteration, you would add that in.
Yep.
Hey,
So,
Rich, a question.
Yeah,
You were just
Tom.
working on repairs and maintenance. What about building in replacement costs?
you know, I guess 2 things there. True replacement costs for when that truck breaks, finally needs to be tossed out or something, is not itself an expense, except to the extent that you want to call depreciation that expense, right? That is the wear and tear ongoing. It is a separate funding issue whether you want to put some cash aside to fund into a cookie jar to, as they say, fund that depreciation. But true replacement costs wouldn't be an expense. It would be a separate cash issue of either putting money aside to save up for something, or at the time that the truck does finally break down and have to be disposed of, you have to go out and borrow the money or spend the money for a new one. Not in this sense an expense category.
Gotcha.
So I have a
Another
question.
answer, Tom, is that although we have consciously decided not to dwell on it in any great length in these input tabs, it is in one place that you'll see coming up. The template itself invites the owner and the mentor to consider any type of capital expenditures that may be needed over the course of the next 3 years. So if, for instance, I decided I was going to need to replace my F-150 pickup truck in 3 years and spend another $15,000 on another one, I can put that in as a capital expenditure, in year 3.
Where do you add that?
In input tab 4. And you'll see that in a few minutes, Tom.
Okay.
But
great.
it's an important, Tom, it's an important business point for an ordinary F-150 truck. Presumably, at 7 years out, the thing dies and he goes out and refinances another one. Something to think about, but it's not that big of a deal. I used to do business with a radio station that had its biggest asset was a huge tower with an antenna on the top of it, which they depreciated. So that showed up as an expense, but it was a whole separate issue of how do we fund this thing when it comes to the end of its life, which is huge. And that's a separate cash flow issue that for that particular business was more than just going out and getting another Ford pickup truck when your last one dies.
So if I'm working with a new client, I want to build on Tom's question, and I'm doing startup funds, and they need a truck to start, but they don't have the business yet to hire other people and do the other things in the business. But if their sales projection gets to a point that in year 2 or 3 they do, I'm not sure where we add that when we get into the projection model. So maybe we can cover that.
When we get that, yeah, let's do that. We don't have it built in here because the worksheets are really focused on a new business starting up. And let's just get kind of the startup in year 1 under our belts.
We covered
But we can add it into the template.
You'll see in the additional inputs tab in worksheet.
Okay.
It's right at the bottom. We'll look at it in a few minutes.
Okay. Thanks.
What's the next section?
All right, so we got this. We got the operating costs. So now these are the month by month by month by month expenses. Now the next one is let's turn to actually bringing some money in. We figured out all the ways to spend money to get this business started and ongoing expenses. Let's start to think about bringing some money into this business. And so this worksheet is set up along the lines of the template in that it looks at sales units. So of course, Lou is going to sell a bunch of different things. A grocery store is going to have 10,000 SKUs. Businesses will have lots of things that they're selling. But for projection purposes, both the template and our practice is to say, let's try to condense those into a few types of businesses. If it's a jewelry business, maybe it's retail sales and service. Or if it's the grocery store, maybe it's produce and canned goods and dairy or something like that. Of course, there'll be variations in there, but for projection purposes, it lets us think of an average. There's no magic number to how many. We have 4 in here. I think the score template suggests 5 or 6. Anything in there is probably fine. If you have 37 units of sale, it's going to be unwieldy. But recognizing that within those average types of things that you're selling, 2, 3, 4 probably are manageable, and recognizing their averages. So for the grocery store, some vegetables are going to be more expensive, pieces of produce will be more expensive than others, but on average, blah, or rings or so forth. And so, Lou, as you think about the types of things, the other is we have divided this into products and services. So again, to the jewelry store example that I use in Simple Steps, they have a product which is retail jewelry, rings and bracelets and things like that, where they're not Zales, but they're not Tiffany's. They're somewhere in between. But then they also do repairs. So they would have a couple of units of sales that are products, things that they're selling, and then a couple of services, just general repairs when somebody brings in a broken earring or something like that. And so, Lou, as you think about your business, I guess the first question is, are you selling products or services? And of course, there's a hybrid.
Yeah. It is both because
Yeah.
because the ceiling systems themselves are products, you know, because you've got grid and you've got lighting and you've got ceiling board. But
Can I walk
also,
into your shop and say, you know, I'm a do-it-myselfer, and I'd like to buy 2 pallets of ceiling tiles and about 10,000 square feet of stuff, and like a Lowe's, and just deliver it to my house, and I'll do it all myself?
yeah, you know, you certainly could, although I don't expect much business of that nature. When I really think about my business, Rich, I think in terms of unique types, you know, of ceiling systems installation, and they really fall into 2 categories. One is commercial, because commercial is going to be a bigger size type of contract, and competitive with regard to price, because it's bid work, you know, against other bidders to win the contract with the general contractor. And the second type of work is residential installation. Commercial one, residential the other. Residential is going to be smaller,
Yeah.
and a little bit more lucrative from a margin point of view, because it's going to be mostly negotiated contract agreed work directly with individual owners, as opposed to going through a general contractor. So
But you're really selling installations,
Yeah,
which is a service.
I'm selling a total installed product.
Yeah.
I guess
Okay.
is
Right.
the way to
So the
put it.
product is part of it, but you're really selling. So we're going to put you down in the service, but it's going to have a material cost to it.
Yes, absolutely will.
And so maybe somebody calls and says, I want a pallet of tiles to do it myself, but that's kind of nickel and dime stuff. So for this sake, we'll ignore it.
Yes.
Okay.
You would also have repairs, let's say due to a roof leak or whatever.
Yeah. Oh, absolutely. But again, it would fall into the residential or the commercial type, you know, of business. You could have something in repair services, but
Okay.
you know, once again, it's going to be, I can include all of it in either residential or commercial, Henry.
Okay. All right. Well, let's start with the commercial installation. So an average size contract, again, they're going to be all over the place, but think of an average size contract.
Well, yeah, an average size contract or multiple of the average in my business,
And we're thinking of costs now.
It's probably about a $35,000 sales price.
Okay.
You know, and that might be a retail store, ceiling systems. If it gets into installing these systems in a much bigger place like a school, then it's going to be multiples of that $35,000. Or if it's an office building, it's 10 stories, it's going to be maybe 10 times those $35,000 packages. But I think my average ceiling systems commercial installation is going to be around a $35,000 number.
Okay.
So
now let's think of the cost of that. Let's start with what is this going to, that average, keep that average in mind. What's the cost side of that? So presumably you'll have the stuff that you're installing, the materials, and you're going to have labor.
Let me think for a minute. I'm using my calculator. my costs for that job or my labor costs are normally going to be in the neighborhood of about 27% of sales. So Kathy, that $35,000 is not my cost estimate, it's my sales price. And I'm figuring that I might be in the neighborhood of $9,400 for labor, because
Okay.
my labor is normally going to run in the neighborhood of about 27% of sales. So if I take 27% of $35,000, I'm looking at $9,450 of labor cost.
Lou,
Yeah,
can you
and-
general, can
And
you
Kathy,
general,
okay.
can you,
Sorry,
can you,
Henry.
that's all right. Can you generalize cost per square foot of ceiling area?
I can to some extent, but because each and every job is very unique, Henry, and the circumstances, of the installation are very unique, and the school system is different, than an office building, and a retail shop, is different, than a fitness center, or a gymnasium. I really think more in terms of what is my labor normally run as a percent of sales, and what do my material costs normally run as a percent of sales.
But that's
So-
exactly the sort of thinking process to go through to try to come up with this general average.
Yeah, and so when I think about the labor costs, they're normally in the neighborhood of about 27% of sales. Labor costs, and my material costs are normally in the neighborhood of about 30% of sales. So, well, let me think for a minute.
Well, Lou, as you're thinking, again, it comes back to the types of business and how they're doing. When Kathy and I were talking about a hairstylist, their service business too, I guess you could do square inches of hair, and some of us would be cheaper than others, but that's not the way their costs actually work out. So it depends on business by business and client by client, but it's exactly the sort of questioning and probing that should be done.
Henry, it's my labor costs are more often than not going to be about 40% of sales. And so if I take 40% of a $35,000 sales number, I'm looking at about $14,000 of material expense, about $14,000 at 40% of sales.
Yep.
Whereas my labor costs are at 27%. So that's a total of 67% of sales that are direct costs, Henry, which is going to give me a 33% gross profit margin. And that's a norm for me.
Yeah, there you go. All right.
Would it help to identify a few categories in which the ceilings are unique, or what makes them unique?
Well, it really depends on functionality, and it also depends on style. If I'm installing a ceiling system in a hair salon business that wants their ceiling to look like tin plate, and so that's a high style, type of ceiling, it's going to be more expensive in terms of material costs for that kind of thing than simply a normal punch and fissured ceiling board. But overall, my commercial ceilings, based on the 15 years of experience that I've got in this business, overall, I'm going to be in that 33% gross profit margin for my commercial work, and the costs, are basically going to break out in the neighborhood of about 40% of those costs are material and 27% labor. That's the experience that I have.
And again, this can be adjusted if, as Lou said, suddenly he starts to think about it, or on further research, he says, oh, I really realize I'm going to be doing hair salons, small shops on the commercial side, and 10-story buildings. I have these two very different categories. Then we probably want to break them out as two different sales units because their averages are so different. But for starting purposes, he's lumping them together into a generic commercial installation. Some will be larger, some will be smaller, but as long as they stay in that general area, this probably is a good place to start. Lou, how about residential? You'll be doing some
on the residential side. It's a much smaller job average, Rich, because it's more often than not going to be basement recreation rooms. That ceiling system, drop ceiling system is being installed, or it might be some high-end room with some fancy type of ceiling, like a decorative ceiling in a dining room, or a decorative ceiling in the kitchen area. But the size of the job is very different. More often than not, it's going to be about an $8,000 job, or sales price, as opposed to a $35,000 sales price for a commercial.
Okay.
So I would use 8,000 there, Kathy.
Okay.
And about 40% of that is going to be labor. So what does that work out to? Because that's more labor intensive, but $3,200, and about roughly in the neighborhood of 15% of sales is going to be the material costs. So what would that work out to be? 8,000 at 15%. It's about $1,200, Kathy. That's about right.
Okay.
That may be a little bit high. No, that's about right. Yeah,
Okay.
yeah. My gross profit margin would typically be more like that 45% margin in the residential side, because it's direct bid, it's direct price negotiated work directly with the owners.
Yep.
As opposed to going through a general contractor being bid work.
Yep.
So
Okay.
smaller packages, higher margin than the commercial side, Rich.
Good, as you'd expect. All right.
Yeah.
So just a comment, like you mentioned the hair salon. So sometimes when I've worked with clients, I ask them to actually go back and time study what they're doing, figure out how much time it takes you to make a bouquet, or how much time it takes you to do hair, so that you can get to what the labor hours per is to be able to do these kinds of things. So sometimes having that kind of process discussion helps pull these things out.
Yeah, it's sometimes a longer discussion than we had right here, where Lou had these numbers sort of at his fingertips. This is where there's really some teeth pulling and some thinking, and on our part, making sure they're capturing these expenses, because these costs, because if they misestimate here, it's going to ripple through the rest of their business and get them in trouble. I do want to. Kathy, you've added a few little calculations here, and that's fine. They get picked up on the next one as well. I do want to note one item here, that the labor, Lou's included labor costs, and I think, when we talked back in salaries, there was the question of double counting. And so as we'd have this discussion, I would say to Lou, this labor this isn't your salesperson out here doing this labor. This isn't you doing this labor. Because if it is, we need to make sure we don't double count. This is, you're going out and hiring people to do this labor.
Correct. That's absolutely correct.
Yeah, yeah. Because we don't want to have you as the owner, and this is especially true for very small businesses, to have you as the owner in the tab number 2, collecting a monthly salary, and then also build you as the owner, as the person who's the labor on all these jobs, because the income statement will pick them both up and we will have an enormous labor cost in here.
To our participants, a note on this process is that as we've worked through this template over time, we came to recognize that the clients and mentors were spending lots of time focused on individual elements of operating expenses, like insurance, like office expense, like advertising and promotion, like travel and entertainment, et cetera, and really not enough time focused on what are the direct costs, of producing their product or their service, and that if gross profit margin really is more important than your mother, in terms of business success, then we really needed to spend more time focusing on how are the products or services what is the direct cost of producing the products and services that you're selling. And so by getting some more emphasis on this, by being very, very clear and specific regarding cost elements in each of the direct costs of products and services, we felt it would be more helpful discussion with the client. So that's the reason for putting this in here.
And Lou, we have one other category of ceiling repair. Henry brought it up. Just in the interest of time, I would say, gosh, if you discovered that you're going out on 35 jobs a month where people are calling you and saying, you know what, some of my tiles have fallen out, or this, that, or the other thing, and I'm doing $500 repair jobs, I would say then it becomes its own separate category. And maybe we'd want to think about the labor and material costs and so forth for those, because it is very different from the original installations. But maybe in the interest of time, we'll just pretend that we have these two. You're not doing much ceiling repair, although it's an excellent question. And if we were really probing your business, we'd want to think hard about that.
Yeah, I totally agree with your comment, Rich, and thank you for the question, Henry, because really hadn't thought about that in developing this hypothetical template. And it's a perfect example of a great question that occurs, between a mentor and a client in a process like this.
Linda brought up
dealing with a commercial repair job that could become significant.
Yeah, no, absolutely, and yeah, exactly. I mean, it's a good question to ask. Linda brought up another question, which I think is important to talk about here, which is a different kind of business, which is a consulting business, for instance, where your jobs are not as clearly labor, materials, and installation. And in those cases, you wind up having most of your costs. If you're a consultant, for instance, you'd wind up having most of your costs as that fixed cost, which is, you and your consultants. I mean, you're just all getting paid salaries. And the question is, how much revenue can they bring in each time? It is a separate discussion of how much time does each job take. If you're a tax consultant, for instance, maybe you wind up saying, look, I could do 3 of these a day because that's all the amount of time that I have. And so as you figure out, it doesn't become a question of costs per job per se. It becomes a question of how many can I do? But but the salary cost is all salary cost in effect. It's a separate pricing discussion of how much should I charge for these jobs in order to, given how many that I do per day, how much do I need to charge, and so forth. So the model is sort of built more for a product seller or a service installer provider type thing. It absolutely can accommodate a consulting type job. You just need to bend it a little bit. Kathy and I had Kathy's client who is a real estate manager and hence collects a little bit off of all the rents of the properties that she manages. You know, her per job cost is really opening envelopes with checks in them and depositing them. Her real question is, how many of those things do I need to get and skim a couple of % off in order to pay for my rent, my operating expenses, and so forth? Excellent question. It really depends on the kind of business it is to exactly how you fill these things out, and think about how the business makes its money and pays its bills.
So Rich, I just want to add on that, maybe Linda will help you a little bit. In the
Kathy, be careful of one thing. It's 11:20. We got 2 more tabs to complete, so just want to make sure we don't run out of time to get that done today. Okay.
Yeah, I just was going to make a quick comment. In the case of this particular property manager, the time wasn't directly attributable to a job. And so it was more like operating the business than a specific revenue component of the business. And so in that case, it was more sense to just have it as total labor operating the business, but not job cost specific.
Yeah. But it's an interesting question, how to then price jobs, which may be a whole separate discussion.
And just my real quick follow-up on this is, so I'm thinking of a client that I'm working with who's just planning her business, just starting, and she, you know, where I would use this template with her and I would orient her more to what we were talking about earlier on, as you said, just that fixed cost idea of, look, right now you don't need to, because she's not sure if she's going to offer, you know, training courses or just one-on-one consulting or a combination. So again, you know, this might be useful to her to think about for the future, to just explain this to her, because this is not at all her area of expertise, but say, look, for the time being, let's just focus on that fixed cost. What do you think you need to live on, you know, if this is going to be your sole source of income, right? You would agree with that? Okay.
Yep. And it's a similar but slightly different conversation then of how the revenue of that works. But for her, it's covering those fixed costs, really. She doesn't have many variable costs, it sounds like. It's just her. It's just her time all the time. Yeah, exactly. And she has a limited amount of that.
That's right. Thank you.
So we've looked at the cost for each one of Lou's types of jobs, residential and so forth. Now let's talk about, and he's already told us the price that he thinks he'll get for each of those types of jobs. So now let's talk about how many of those he can do. And that then drops right into his gross profit. And so this is a projected sales and gross profit sheet. And I would use one of these for each of his units of sales. So for this one, let's start with, I think we did commercial first. So let's make this commercial installation. You already told us the sales price per
price is $35,000.
Yeah.
Per unit.
35. Oh no, down the next line down. There you go. And the direct cost, this doesn't pull over. You actually have to flip back and look. What did we say? 23,000.
Direct cost $23,450.
23,450. All right. So Lou, as you think about how many of these sort of jobs you do per year, what are you projecting out? And I don't know if you have much seasonality in this business or not. This is built month by month by month to accommodate those businesses that do. If you had no seasonality, it would be, you know, 9s all the way across or 2s all the way across or whatever. But as you look out, what do you think you're going to be, how many of these things do you think you're going to be doing?
Let me tell you what I'm thinking, and let's populate this worksheet, and then we can come back and talk about it, okay?
Mhm.
There's no seasonality in my business. It's all indoors, you know, so whether it's winter or summer, it doesn't really matter.
By its nature. Yeah.
What really matters is build up of contracts, you know, over time till I can reach a level that should be decently profitable for me. I know that I already have 3 contracts over $100,000 value pretty much in my hip pocket already. I've done everything that I need to do except sign those contracts with the general contractors. And as you know, I and the estimator are going to be working for 4 months in advance of starting to bill. So I think that for the first 4 months of next year, we're going to average doing 1 contract a month for each of the first 4 months. And then for the next 4 months, it's going to be 1.5, 1.5, you know, contracts, or what's that sales value work out to be? Yeah, 52.5. Yeah. And then for the last 4 months, so there's another 1.5 there, Kathy.
Oh, it's rounding up because we have the
Yes.
digits set to 1. Yeah.
Right.
She
Right.
put in 1.5. It's just rounding up to 2.
Yes, and then the last 4 months is going to be 2 a month for September, October, November, December.
So all that gets you to 18. Isn't that funny? It didn't. I was just about to say the Excel version of the spreadsheets fills in a little bit of these numbers for you, but somehow the sum number didn't get carried over.
It didn't pop up? No.
Yeah, Kathy's having to do it herself, but it's 18. I'll make sure it's in the correct version.
Okay. Well, once again, guys, in the template, as opposed to the input document, you can do in that template exactly what Kathy did. You know, the unit volume number rounds to a single number, and I just went in and changed the format of the cell so that I got 1 digit, so I could see 1.5, you know,
Yeah.
just like Kathy did.
Mm-hmm. So whatever's useful to you.
And so what I'm doing is I'm building up over time, you know, as I bid and generate a backlog, because in my business, ideally, I want to have 6 months worth of work in my signed contract backlog, you know, at all times, you know, that I know I'm going to be doing in the future with regard to firm contracts. So I'm having to build up over time to get there.
Okay.
But the residential side.
All right, on the residential side, then that's the next. So we've populated this sheet with the number of jobs. If it then ripples down to picks up the direct costs per job, picks up the gross profit for job, and tells you on this sheet, again, this is just for convenience. The template does all this too, but for convenience, if you're talking with a client, it then tells you what the gross profit margin at the last line there is per month based for this unit, based on your projections. So now let's turn to the residential contract, which is your second job type, and populate this same sheet.
And there the sales price is $1,000 per contract, excuse me, $8,000.
So 8,000, yeah.
Per contract. And
the cost of goods,
$4,400.
yeah. How about those? How many? What are you projecting out for sales on those? How many jobs per month?
I'm just saying 1 a month, Rich. You know,
Okay.
just straight on out.
Yep.
I don't know how to estimate it any better than that at this point in time until I get
then
some more
that's fine.
experience.
Yep.
Uh,
Again, these are not income tax returns we're turning in. These are what you think your business is going to look like. And so that's fine.
Yep.
And in the iterative process, we may come back and adjust that. Again, we'll get the summing in there.
Now, before we go any further, guys, a point to all of our participants. There are many times over the years that I have just worked with a client and we have simply estimated sales and cost of goods sold in dollars, just done dollar sales estimates, period.
Mhm.
But if you can break a business down into its components, like we've done in this one, and say, what is the average cost of a widget that you're selling and what's the average price of a widget that you're selling, then you can do sales projections in terms of number of widgets. I mean, for example, if you're a ladies retail shoe store and you're selling shoes, number one, and handbags, number two, and scarves and accessories, number three, and you can state the average pair of shoes is going to sell for $80 and the cost is going to be $50, and the average handbag is going to be $60 and the cost is going to be $40. Then you can project sales in terms of how many pairs of shoes are you going to sell a month, how many pair of handbags are you going to sell a month, and you can put in seasonality, etc. And it really becomes it becomes more meaningful to the client if they can project sales that way instead of a blob of just dollar value. Does that make
Especially if
sense?
they have different gross margins, because then you can start thinking about business strategy. How do I drive more business to handbags rather than shoes if they really are two very different types of things? Or how do I combine? You know, you can start thinking about business strategy, which
Bingo.
is all this is for.
The key thing, though, is that rather than just a blob of sales numbers thrown into an estimate, having them think through the individual elements of their business in terms of product or service types helps them to think about it more clearly. Really does.
This, and I can't let this go by without repeating Fred's story, which I have stolen and use in my class of the pie lady, who came to, at least in my version of Fred's story, came to Fred and said, I've been selling pies for years. People love them and I'm not making any money. And he said, well, let's start at the beginning. How much does it cost to make a pie? And she said, I don't have a clue. And when they actually broke it down, it was more than what she was selling it for. And it's hard to make that up on volume. And so this helps you think through the cost versus the sales price in some detail so that one's more than the other. All right, so now we've looked, Lou, at both of your types of business, the residential and the commercial side, and have come up with gross profit for each one of them. And this is, we'll get input into the template at some point, and it will figure out an income statement based on this. But this at least helps think through the sales columns that you have, both in terms of cost and sales and volume. And this is the dialogue for starting that. Let's go to the last one, which is the other stuff.
Okay.
The things that once we start putting into the statements will affect your cash, will affect your needs, but don't fall into the sort of big categories that we've talked about. And one thing that will affect your cash is receivables. So if every time you finish one of these jobs, somebody hands you a check on the way out the door, that would be pretty nice. But I'm guessing you're going to be actually billing people.
Yes.
And hence not receiving your cash until some period afterwards.
Yes. And as I think about this, Rich, this is a big factor for me in my business because I'm in the kind of business that has pretty high accounts receivable at all times. And typically what's going to happen is that with my residential work, I might even be able to get a deposit, you know, for maybe a third up front before I even start it, you know, or if not, as soon as I complete that small job and bill it, you know, then I'm expecting my residential owner to pay me immediately.
Mhm.
You know, so the vast majority of that business is going to be upfront or within 30 days. I'm receiving my money. But on the commercial side, which is the much bigger part of my business, typically what I do is, let's say I'm doing work in February. I might issue an invoice for my total estimated work for the entire month to the general contractor on February 25th. And if I'm lucky, you know, I get paid by the end of March. If not, it's going to be in April, you know, when I collect my money. So it's going to be 30 to 60 days, you know, after my billing date, which is the 25th of the month, before I collect my money. So as I think about this, total business-wise, probably only 10% of all of my sales are going to be paid in cash or within 30 days, Kathy. So if you change that, if you put 10% there, and say percent of sales paid in cash or within 30 days, I'd like to change those words. And I'm estimating about,
So that leaves about 90% paid within 60 days.
I'm estimating that 50% of that would be paid within 60 days. That is March. I mean, if I'm billing in February, and the remaining 40% later. So it's going to be about 50% within the 30 to 60 day category, and 40% beyond 60 days. So maybe it's 50% within 60 days and 40% more than 60 days.
Kathy, I've captured that, and I will get that into the Excel version rather than you having to try to type all that out.
Yeah, it just really needs one more line, Rich.
Yeah.
Mm-hmm. Yeah. And so, you know, I'm gonna have on average in the neighborhood of 50 to 60 days sales outstanding, you know, in my business, because of the nature of it being a bid business, and the general contractors want to pay me as slow as they possibly can.
Yep.
You know, one of the keys to my success is that I'm having to follow up with the general contractors constantly to collect my money, because in this business, the squeaky wheel gets the grease. You know,
Yep.
and if I don't follow up constantly, I'm not going to get paid.
Yep. So that's how you're spending your day.
Yep.
How about on the other side, paying out?
Yeah,
I'm guessing people are going to be pounding you pretty hard.
Yeah, I'm probably going to have to, you know, 50% of my expenses are going to be paid in the month incurred, and the other 50% in the following month. That's roughly what I'm thinking, you know. So if I got $4,000 a month of expenses, you know, which is what roughly we were estimating. I'm figuring that, you know, 50% of it's got to be paid in the month in which it's incurred, and the other 50% in the following month.
And you're in a contracting business, and so these really become big items for you. Somebody in the retail business who people are paying for with credit cards, or in the hair salon business where somebody swipes a card on the way out, it's all cash.
Yes.
You know, you're paying for things as they come in with cash, supplies. You're getting Visa deposits in your account the next day. So it's all cash. This becomes an irrelevant thing for you. But for contractors, this will be important. You already said for deposits, residential, you might get a little bit up front.
Residential, maybe
nothing
1/3.
for commercial.
You know, one third would be a norm, you know, at the date of signing of the contract.
Yeah.
With a residential owner.
So a pretty small overall amount
Yes.
in your business. Okay. You're not a very seasonal business. So if we move down to additional items on 13,
How do you want me to capture accounts payable here?
oh,
We want
it's
it
going to
to
be 50 within,
50% within 30 days.
For residential?
Just the
just
total
total,
accounts payable.
50% in 30 days, 50%, 30 to 60.
Yes,
Okay.
50% within 30 days. And 50%, 30 to 60.
Okay.
Okay.
We'll give you time to do it, Kathy.
Yeah. And again, I'll make sure it's in the Excel version that we send out.
Okay.
Deposits, we just talked about, maybe a chunk of your residential, which is a fairly small percentage of your total business. So not a significant piece,
Correct.
but a third of the residential.
So what am I missing? I'm sorry, I was.
That's all right.
You're okay.
Deposits,
You're okay.
just say a third of the residential.
So that goes where? Here?
And that,
As a note,
correct.
and
That's right.
yeah,
Okay. So this goes here, right?
Yep.
Okay.
yep, there you go. Again, these don't fill in directly into the template, but are a way of capturing important parts of the business.
What do you think?
Let's slide down to additional. Lou said he does not have, it's not a seasonal business. So this isn't a Christmas retailer that needs to start buying in huge amounts of toys in August. Doesn't sound like that's going to be an issue for you, Lou. As jobs come in, you get whatever materials you need and you build them to the job.
Right.
Additional fixed assets during the first couple of years. I don't know that we
Is
need
this
to
the
go into
extra truck? Is this like you have to buy a truck later or something?
Nothing major that I can envision right now. You know,
Okay.
3-4 years out, I think yes, but nothing else. I don't see anything right now.
Okay. And you don't have to have anything here, but this is a good spot if there's really a trigger to remind people.
Yeah.
And effective income tax, we'll just let the machine do that unless you have some special circumstance that you.
My comments to our participants is this: the template is pre-populated with 20% as a default number, taxes. And the concept is simply this, folks. 15% is the lowest federal income tax rate bracket. 3% for state, or really 4% for state, 1% for local. So it's 15% for federal, 4% for state, Pennsylvania income taxes, and 1% for local. So it's 20% as a pre-populated norm. If you were talking about a business that's going to be generating millions of dollars of sales and hundreds of thousands and millions of dollars of profit, that tax rate assumption is going to need to move up towards 25% or even 30%, depending on the size of the business. But that's the logic of why 20% is pre-populated in that tax.
And again, for this worksheet, we'll probably leave it blank and just let the pre-population do it. But it's there as a, if you need to make an adjustment, more just a trigger to ask these questions and check.
Yes.
I have at the bottom of the sheet a note for mentors. of where these various items get put into the template, just to kind of help you think through that, because there is no single sheet that reflects this exactly. They get put in various places.
Kathy, back up on this cash receipts and disbursements. Back up towards the middle for a minute. Right, additional inventory. Stop. Additional inventory. Go slide down. Let's change that assumption for purposes of our participants. Let's say, as I build up my business, I anticipate the need for additional inventory as the business is growing. And let's say that I want to assume $15,000 of additional inventory in year one, $5,000 per quarter in the first 3 quarters. So March or April, $5,000, June, July, $5,000, September, October, $5,000. So I'm building up $15,000 of inventory, more than I started with in year for startup purposes. I want to put that in here, Kathy and Rich, because I want all of our participants to see how that has to be inserted in the template itself when it comes time to do so. Okay.
This is, you can probably think of other cash receipts and disbursement items. These are typical ones, and so it's really, again, just a reminder to have the conversation. In the chat, there were discussions of discounts for prepaying and so forth, and they are further refinements of these. And in conversation with a client, you probably want to bring those out. The template can accommodate them, but this at least gets the discussions up on the table. So with these 6 worksheets, we've covered lose startup costs, lose salaries, lose projected monthly costs, the gross profit, sales and costs that he has for each of his products, how many of his things he's selling per year, and this collection of oddballs. And so by and large, the point is a conversation through these worksheets with a new client gets you pretty darn close to what you need to do a projection. And so if we're okay, let's, in the few minutes remaining, click to the template. And I know some of you have worked on the template and are familiar with it, but let's just run through that quickly so that you then can take these worksheets and give it a shot and see what happens. So if you go to, go back to the very beginning. We're not going to go through all of them, but you will recognize the orange things are what you can fill in, and you will recognize the startup expenses in a little more detail, but the same sort of startup expenses that we looked at, and the sources of funding down at the bottom. If you go to again, you fill in the orange one and it will ripple all the way through. If you look at the payroll for year one, and let's just worry about year one for now. Again, you see the same sort of thing on the worksheet. The owner in column A, full-time, part-time, how many there are, what they get paid. And this one does run out by month, whereas we, I think, just did the average for the year. So if you want to, if it's the same all the way through, you just put the same number. If you have seasonality and you have to bring on extra workers because you have a Christmas buildup or something like that, or you're a landscaper in the summer, then you can do that here. The new tab, years, the following years, it will do years 2 and 3 based on pre-populated percentage increases. I would say for the moment, let's not focus on those and worry about those. Let's get year 1 nailed down first, and then we can make adjustments to years 2 and 3 if we need to. If you look at the gross profit tab, this is a tab that we added. there had been no real gross, there was a gross profit calculator, but it didn't plug into anything. This looks very similar to that gross profit worksheet that we did with Lou. Again, you pick the product or service type that you have, the unit. You can go up to 6 of either product or service. Product, again, is I'm buying wholesale rings and selling them in my jewelry shop as retail rings. Pure service is perhaps a consultant or something like that, or Lou's installation business, where materials are part of it, but he's not purely selling products in his store like dresses or handbags or rings or plumbing supplies. And again, you fill them in the same way. And I have the caution down there of double counting revenue, or labor. Yep. The next one, 3A. Again, the orange is simply filling in the number of each of those items that you'll be selling per month. Unlike the worksheet, this actually does populate everything. It brings everything over from the gross profit tab that you've done. So you don't need to fill in the products or service names or the margins. It will bring that over. You do need to fill in the sales price per unit and how many units you're selling. And then it will do all the formulas are actually in here. And so it will do the calculations for you. All the way down for each product and service, all the way down to the very bottom, which sums by month and sums across by product and by the year. And then the next tab is years 2 and 3. Again, it bumps up by some calculated percentages. Let's not worry about that too much right now. The additional inputs tab contains some, but not all of the things that we just talked about. So accounts receivable in a little more detail, accounts payable, additional fixed assets, the income tax assumptions, some of those other items that are captured on the worksheet, I've indicated where they have to go in the various tabs. It doesn't match this tab exactly. The next tab is the operating expenses. And so you can see I've done the worksheets in a slightly different order for the pure reason that as I thought about how a new entrepreneur might think through his or her business logically, I put the operating expenses up front. And I said, think, what are you going to have to spend each and every month? Order does not matter. I just happen to like that order. This uses a different order, but you can see it captures all the detail that we talked about. Again, as Lou said, this is not exhaustive. If you need to change the line 16 that says licenses into line 16 that says water bill, just type it in. That's fine. It'll do the calculation. The next tab is years 2 and 3. Again, it just populates that automatically unless you go in and really manipulate it. Let's not worry too much about years 2 and 3. So those are the input pages. Oh, sorry, with one more item, which is the cash flow. This lets you, again, if you follow the orange lines, additional inventory you might need, you can put in here. Owner's distribution, if outside of salary, by God, Lou's going to take his $50,000 a year and he's going to take $600 every month or $6,000 every month or whatever it turns out to be. Line of credit repayments, dividends, other things that will affect the cash but not actually affect the income statement. This is a hybrid page. A lot of this gets calculated from the inputs you've done but allows you to add some additional inputs for year one. The next tab is years 2 and 3. Again, calculates on its own, or you can fill it in. Let's not worry too much about years 2 and 3. So those are the input statements. From here on out are the standard financial reports that come out. The income statement in year 1 by month, income statement for years 2 and 3, balance sheet in the first year. Sorry, we should have a, yeah, okay, balance sheet. This just does first year, second year, third year. We don't do monthly balance sheets here. And then some analysis. It will give you some break even, which are more applicable to some businesses in this format than others. You may have to fool around a little bit, but it's good information and it's right there. Some financial ratios, if you want to do ratio comparison with industry standards, whether that's RMA or the Association of Gasoline Retailers or something like that, wherever you get those industry standards, this calculates the standard ratios and you can compare them just to see, are you in the ballpark when you do your projections. And diagnostic tools, which is a little bit of kind of applying general industry standards, general business standards to the business that you've just projected. Not to say that you have to be in that area, but if your owner's draw is a whole lot more than average, or if your gross margin just seems excessively high, it should cause you to go back and say, is there something peculiar about my business? Are my assumptions right? Or have I accidentally put in a 99% gross margin instead of a 9.9% gross margin? So it just causes you to think about some of that stuff as a part of this iterative item. And then amortization, I don't think we need to do too much with, but that's the next one. And that again just falls out of what your depreciation and amortization expenses might look like. I guess if you were thinking about replacing that truck and paying for it, this might lead you to think how you'd want to do that and so forth, but it doesn't, it's not too important for this. Oh, it also does some debt service for you. Okay, and then revision notes. So it's really those first input pages that more or less, but not exactly, match up with the worksheets that let you input the data and generate a financial statement for Lou's ABC Sealing Company. And we will send out the filled in versions of the worksheets that we did today and suggest, give it a try, fill it in, see how it goes, especially if you're not all that familiar with it. You can't break it, you can't screw it up, and there are no right answers here, except to the extent that we've sort of done the same thing, and we'll talk about where we wind up with differences. The whole goal of this is to have a conversation with the client and say, here's what your business would look like if we use the assumptions that we've been talking about. If we've been using what you're thinking about your business, here's what your business would look like. And so it lets us push this dialogue a little bit further to help the client understand, to help Lou understand, so what does your business look like? Can you afford to pay yourself? Can you afford to do all this stuff? So I think that brings us right up till noon. If there are other questions or comments, fire them out.
I would add one. We really want all of you to take the input documents, the completed input documents that Kathy's going to send to everybody. We want each one of you to input those into this template to get that experience for yourself, to understand exactly how this template operates when you input the information into it. And there's one big question that I want you to address. And it's this. Does this information suggest that we're going to have enough money to finance this business strategy or this business model? Does it look like we should be able to get the bank financing necessary to finance this business model over and above the $50,000 owner's equity? Or are we going to have to reassess, our need for bank financing in order to finance the business that I can envision? It's a critical issue because this model really is designed, as I've said before, to answer three questions. Number one, does this look like a feasible business from a profitability point of view? Number two, how long is it going to take me to get there? Is it going to take me 3 months, 6 months, 9 months, 12 months before I'm profitable? How long is it going to take me to get there? And number three, how much money am I going to need to finance my business concept in terms of owner's financing and bank financing? And is it feasible, that I'm going to be able to get that financing, or do I need to rethink my entire model from a financing point of view? And you will find that information very interesting as you input these assumptions into your business model. I want you to ask yourself those questions and come prepared to discuss those questions and those answers at the next meeting.
And we will find it interesting because I think some of these numbers are different from the ones that we had sort of played with at the very beginning. So we will find out, Lou, whether you should stay with your day job or jump into this.
Yep, totally agree.
Anything else?
Questions, guys? Thank you for sticking with us.
Yeah.
We appreciate your participation very much. And Linda, nobody interrupted you all day. This is really nice.
I had no worries, Lou. I had